Greetings, YouTube friends. What happens after you recognize the ABCD pattern? You begin to see how price, time, risk, and repetition all work together. Today, I'm joined by Larry Pesavento, veteran trader, teacher, author, and one of the leading voices in Fibonacci trading and harmonic patterns. In our first conversation, Larry walked us through the ABCD pattern and why risk must come before reward. Today, we're going deeper into how he identifies high-confluence setups and what traders should be watching for as price action unfolds. And Larry's also going to kick off our session by sharing his take on the current markets. Welcome, Larry.
Hey, Margo, how are you?
I'm very good.
Okay, I'm going to share this.
Yeah, let's see it.
Okay, I put the share screen up here now. Okay, we got to go back a long time, folks. About 40 years ago, 1987, the stock market was making a high in the Dow Jones at 27,500 on August the 25th of 1987. It was known as Harmonic Convergence, and that meant there were 5 planets in conjunction or opposition lined up on the exact same day. And you can see here, it said 5 major conjunction. We had a new moon, just like we had yesterday in the new moon, and then we have other things that are going on. But basically, what I do is ABCD. You don't see some of this on the bottom. These were from commodity perspective charts that I still used for many years, because remember, we didn't have this computer stuff until '83. And so I was kind of slow grasping it. So I was still using, regular charts and hand posted these every day. I was looking for this ABCD pattern to come in right here on the 25th of August, like everything else, because of all these planetary things that were lined up that particular way. So what I did, I knew I was writing a book, and I just finished my book, Astro Cycles, A Trader's Viewpoint, and I was on a regular on Financial News Network in Los Angeles. It was a precursor to CNBC's, show that they have, because when they closed that down, Sue Herrera went to New York to start CNBC, and I was on CNBC for quite a few years. But then after a while, I just got tired of doing it, and I just didn't do it. But this is what I'm trying to show you is where we are right now. We're looking at something. I want to bring this up just so you can see what I'm talking about. Get up to the next one here. If I can move this out of the way now. See, there's the problem. Oh, man. Come on, get out of the way here. Now I can't see what I need to see. Okay, let's get to the next one here. See if I can get. Here's what it looks like on a piece of paper. Is that coming through okay, Margo?
Mm-hmm. Yep,
okay.
We can see it.
Harmonic convergence was referred by it was known as the Mayan Indian, and in the Hopi Indian calendar. Okay, these are all planets lined up. Now, yesterday, on Monday, we had the Sun conjunct Mercury. That is known as combust. It was done by a man named T.G. Butani. He was an Indian astrologer. It happens 3 or 4 times, well, about 4 times every year. It's really, really important. And the reason why it's important is this Sun conjunction Mercury is what Albert Einstein used to prove the theory of relativity. How that stuff worked, I don't know, but it's talked about all the time in the literature and stuff. I'm a Fibonacci person, real simple. But you can see here on this high that we had in 1987, you see it was 55 years from the low in 1932. It was 21 years from the first time the Dow Jones hit 1,000. 21 years. 1974 was the crash low. That was 13 years. 1979 was right after when Reagan was getting elected, and then new administration came in. We were at a major bottom. That was 8 years. And then that August bottom was when they changed over from Federal Reserve chairmans to from Albert Greenspan, from Paul Volcker, and then 84 was the big bottom, and that was 3 years. All those lined up. So that's why I was thinking that it was going to be a huge, huge move in the market. So all I did during that time was I used to come up here and get this other one right in here. We'll be able to see it. I think this is it. Okay, here's where we were. This was the top. There was your harmonic convergence. We had 5 planets in conjunction. Then we came down into the solar eclipse here late September. Then we rallied for 7 days into the 2nd of October. You can see that was a 61% retracement of that move, okay? And that was very, very important, because on that particular day, we had Venus was trine Uranus, and that was the big Fibonacci planet, because if you figure Fibonacci in 618, if you take the number of days, the days in the year for Venus, which is 255, into the days of the Earth, 365. Divide one by the other, it comes out to 0.618. So this is why I was expecting the market to have a big break, and it did. And it broke down into the 16th of October of that year. I had options on that expired on that Friday. Had I had November options, I'd have made a lot of money. I made a lot of money anyway, but this was where my options expired right there. And I was very happy. The Dow was down 105 points. That would be the equivalent to the Dow being over 2,000 points now, because remember, we were trading at 2,500. So a 10% move is a big break. The Dow broke here, it was 33% in one day. That was the biggest crash ever, even worse than the one of 1987. What people don't realize is this bottom that happened here happened to be the greatest buying opportunity of the all the decades of the 80s and 90s. That low was exactly oh, excuse me, it was exactly 61% of the low from August 9th of 1982. That's what after, the Reagan came in 80, and he said he was going to let the bull loose, but the bull stayed down for 2 years. It bottomed on August the 8th, August the 9th of 82. That low right here in the Dow Jones there at 17,500 was exactly 61% from that level. So that was all fitting in to everything that I was losing, what I was doing. And this is what's happened this year. I'm just going to show you now. We'll come up here. I think I can do this without too much trouble. Come over here, and we will come into the July 13th. I'll just get these up here so I can pull them up, because I do this is right out of my newsletter. You see, this is what I was doing this for, as for the newsletter, what we were getting ready for the trades coming up into the coming week. And all I got to do is to find the thing, and here it is right here. Okay, so here's where we are. We have my ABCD pattern coming in right here. Okay, and we're coming in at the same day that we have Venus. Try that again, Larry. Venus is square, which is much more powerful because it's 90 degrees. Venus was square yesterday on Monday, and Venus was square Uranus. We had a new moon, okay, and then we also had combust. We had the sun conjunct the sun all at that time, and the market came in here, and in the first 2 days we came down all the way down here. So what we're going to do now is we'll come over here and we're going to look and see what happened in real life, okay? So here's where we are. And you can see there's a lot of stuff jumping around right now, but we're going to go with this because this is what we were doing when we were talking about this, okay? You can see there's the prediction that we made. The market came all the way down here. That's a huge move, folks. That's well over $4,500 in a matter of just 2 days. And if you just do a tiny bit of ABCD like we usually do, you'll see that we had markets where the market came down, rallied up to the 382, and that told us that we should have a new low coming in here sometime this morning. And there it was, almost exactly right, within about 100 Dow points. And then it's rallied. Look at this. It rallied 700 points. That's a 3,500 point rally. Now, when we get into talking about this, we watch all of our Fibonacci numbers because, we're always big on that. And we're always watching for 0.786. Oh, try to get the right one, Larry. Hold on a second. There's our high right here. There's a low we made today. You see, it went right up to the exact 786. You see that? See the six, how these numbers will fit together. So now, what I thought I'd do is to make it real easy. I made a presentation to show you where these numbers come. Just before we get off this, I want to show you how great these numbers really are. So let me move over here. Today, the biggest move in the Dow Jones is IBM. Okay, now IBM is down was down $80. It's down 27%. The biggest drop in 60 years or something, they said. Okay, now we're just going to bring this over here like this, and we're going to try to show you what we have here. Now I put these in here so you can see them as we go up. You can see so here's what we are with IBM. Now you can see the ABCD patterns right here. A, B, C, D, A, B, C, D, okay? And you can see, look at this. Look where we had with yesterday. We had this huge move in IBM. The market came down. and went right up to the 786, which we're expecting for the market to come down. Now, this is a daily chart. So 4 or 5 days ago, it made that high, telling us that the ABCD pattern should come down to just about right here. Now, I'm just going to show you. There's your high. There's your low. And look where you want to be. See, wouldn't it be better to be buying IBM at 224 than at 315? That's a $95 difference.
Yeah,
Now there's
that's true. Yep.
it has these patterns are everywhere, but you have to learn to identify them. That's the real beauty of what we're doing. Now what we're going to do now is I'm going to bring up a PowerPoint presentation that explains a little bit about myself and how I found these patterns. So hold on just a second. With a little luck, I'll get this all done. There. Simplicity beats complexity. My whole thing is simplicity. AB equals CD. Anybody that can add, subtract, multiply, and divide and can draw a straight line can do what I do. I can't do the things that Margo does. I know that Venus is closer to the Earth than Uranus, and I know that the days between the planets and stuff like that, and I know how to count from 1 to 10 with both hands and stuff like that, but I keep it as simple as possible. I don't use any mathematics. I just look at a picture. If it matches the pattern, I know I have a trade. I can look at that and tell why doing this after doing it 65 years, and I've been doing it by myself now for well over 50 years. I have not signed the back of a check in over 50 years. I signed the front of the check because I'm by myself. I work by myself, and that's all I do is buy and sell. And I'm pretty good at it. Do I make money every day? Absolutely not. I make money most days because the odds of me winning are better than 60%. Find me a golfer that wins 6 out of 10 tournaments. You're not going to do that. No baseball player back 600 either. So keep it as simple as possible. This me. This is my story. I got started trading many, many years ago. Back in 1959, I got really active into the 60s, and I caught the big grain move in 1972, and I made a lot of money. Gave it all back in 74, which was my best trade because that's where I learned how to trade. And from then, I've been doing it professionally by myself ever since. I did work for Drexel Burnham in Beverly Hills. I set up their commodity department from 76 to 82, where I traded gold and silver and a bunch of other stuff. And then I became a member of the CME, Chicago Mercantile Exchange, as a floor trader. I never traded on the floor after the first day. I stayed up in the office and watched the floor and watched the monitors up. And I just didn't like it. Was very dangerous because people stole from you every day by saying they did a trade with you and you didn't. And it was smelly and it was terrible. So I'd go down in the morning when it wasn't too bad. The rest of the day I spent up in an office because it was just, and I was there a couple of years because I enjoyed it and made a lot of good friends. But basically what I do Fibonacci numbers, ABCD, harmonic numbers. I use the opening price, regular statistics with standard deviation and other patterns like the 3 drives and the 135 pattern, stuff like that. So we'll move on here. Get into mathematics of this. Up until 2000, Merton Malkiel is still alive. He's 98 years old, and he wrote a book called A Random Walk Down Wall Street that was the Bible. He wrote it in about 1962 or 63, and he said that the market was totally chaos, that anybody that looked at charts under scientific scrutiny, chart reading, must share a pedestal with alchemy or magicians and stuff like that. Well, that went along for pretty good years, and then the boys across the old Charles River there in Boston at MIT, Dr. Andrew Lowe came out with a paper April 17th. That was the birthday of J.P. Morgan of 2000. It was in Business Week. It was the cover of Business Week, and the name of the paper was "This Alchemy Shall Yield Pure Gold." And it was written by Andrew Lowe and his associates. Dr. Lowe is in charge of the MIT Financial Engineering group, and he was employed by Merrill Lynch to write this. And of course, the guys that come out of that group there, they get paid. Starting salary for a guy coming out of financial engineering with Andrew Lowe is $400,000 a year. They get $35,000 a month with starting, and it goes up from there. So that's where all this came from. What Andrew Lowe did was he looked at 800,000 patterns over a period of 36 years in the Nasdaq and the S&P 500. And what he did, he found patterns that we know of, head and shoulders, triple bottoms, triple tops, all these things. And each one of them he categorized and he put a mathematical number on it. And then he brought out this book called The Non-Random Walk Down Wall Street, because what he decided was that he found these optimal patterns that repeated over and over again, and they were predictable within limits. And within limits is the important thing. They don't work all the time, but they are predictable within limits. And what he was looking for was optimal patterns and optimal shapes and patterns that he could do this. Well, back in 1976, before Mr. Lowe was a doctor and this guy was running the show, his name was Benoit Mandelbrot. He was known as the father of fractal analysis, and he wrote a book called The Misbehavior of Markets. And we talked about how the risk of ruin and reward and all this stuff fit together. And he knew that there was a process of generating certain patterns that repeated over and over in the markets on every single thing. He called it the thunderbolt pattern, is what he called it. He said, if you could just understand what that thunderbolt pattern was, you'd have a pretty good idea. Now, he called it the thunderbolt pattern, but we called it the AB equals CD pattern. See, it looks like a thunderbolt. That's what it is the ABCD pattern. So all we do now is when we do this, this is right out of the book, 1937, folks. This guy, he did fractal analysis before anybody even knew what fractal analysis was. This was a book called H.M. Gartley, and it was called Profits in the Stock Market. It cost $1,500 for the book, which is a 3-ring binder book of about 600 pages. And he sold 12 copies of it. $1,500 back in 1937, folks, was the cost. $500 was the cost of one Ford automobile. So for 3 Ford automobiles, you could have had this book. It was given to me as a gift in 1970, but I was making so much money then, and I didn't need anything because I just bought and everything went up. I just got lucky, much like a lot of these people are doing right now. But after I lost all my money, I had to figure out what the heck I was doing wrong. So this means this is a parallel channel. This is the ABCD pattern. This is a bull market because you have higher bottoms and higher tops. There's nothing mathematical about that. It doesn't calculus, doesn't count. That's a nut market. This is a down market. You see the difference? So what we try to do is we calculate where to be a buyer or seller at point C. We want to be a buyer at point D, okay? Or if we go back, we'll be a seller at point D. In other words, if you do the opposite of this, go back to this. So you want to be a seller at point D, or you want to be a buyer at point D. So point D is what we're always looking for, okay? So now what we're going to do is add some Fibonacci numbers to this, okay? So we're looking at ABCD pattern, just like Mandelbrot was doing, but we're having the numbers of the Fibonacci summation sequence, okay? Now, just to have some fun with you, you'll see these 4 numbers right here, okay? But write this down so you'll see this later. But take your calculator out, and you do it on a handheld calculator. You guys are good with your phones. You could probably do it then. But put in the number 0.382, 0.382. And then when you do that, hit the square root button, and this will pop up, 0.618. And you hit the square root button again, and this will pop up as 786, okay? And you start working backwards. All of these numbers are related to the square roots and stuff. This was done by Pythagoras in 600 BC. Pythagoras was they asked Albert Einstein, who was the smartest man ever to walk the planet. He said, hands down, he said it was Pythagoras. He said there was man and there was God, and in between was Pythagoras. Well, he did AB equals CD squared and all that stuff, you know? And that's all we're doing is the same thing, only looking at the markets. Only keeping it real simple as we're doing it. Okay, the next one we got here is we're going to take a look here. Here I can prove to you how it works. Now, this is the euro, folks. I know a lot of you don't even know what the euro is, but it's the most actively traded thing in the world. This is the euro versus the US dollar. Okay, now this is over a period of 10 days. It's a 30-minute chart, and as you look at this, you'll say, wow, what does that look like? Well, it looks like an EKG of a cat on his last few seconds. But that's not really the case. But if you look at it closely, and we're going to do this right now, just by the click of the button, I'm going to put these patterns and ratios on that chart for you. Now, look at those numbers, folks. Look at that. Remember those numbers? We were just, look at them. This is 10 days of the most actively traded thing in the world. What's so hard about that? You're in a downtrend, you want to sell rallies. You're in an uptrend, you want to buy dips. Yeah. That's what you have to do. But look at the ABCD patterns in it. Look how the ratios fit together. And folks, this is done. I did this thing 10 years ago, But you could do it today. I could go into the euro and see the same thing today. How many people know this? Very, very few, because they don't study these patterns and understand what they mean. And the only way you do that is by practice and proving to you that they do work. But you'll see these A, B, C, D patterns everywhere. A, B, C, D, A, B, C, D, A, B, C, D. You see how the
Yep.
market starts to make bottoms? You see how the bottoms are higher? Here you got higher lower tops, higher bottoms, so the market's getting ready to change trend. Okay, now you're home now and you say, what did that fat little Italian try to tell me about this stuff? God darn, I can't remember anything. Well, let's just start here. This is the daily chart for the euro, the most active trading thing in the world over the last 7 months. Okay, now it's quite a bit lower than that. It's trading around 114, 115 right now. But when you're looking at this, you say, wow, I don't see anything. Well, here's what you have to do. You have to draw your lines in like this to learn to do them yourself, just to see the patterns unfold. And when you do that, you can see there's your drive one, drive two, there's your ABCD. There's your ABCD. There's your ABCD. There's your ABCD. Okay, you say, well, that looks pretty good, but look at this. There's your big A, B, C, D. You see how important that is, folks? Everything is described by the AB equals CD. Does it do it every time? No. That's when you're going to lose, and that's when you got to figure out what you did wrong. And I spent a lot of time doing that. I focus more on what I'm losing than what I'm making. I know I'm going to make money because this is in front of me all the time. What I have to be worried about is when it's not working because I've done something wrong. The market hasn't done something wrong. I have. So that's what you have to do is take responsibility for that. So that's what you're looking at. I think the rest of this happens to be a 30-minute chart, just like we were looking at before, only a different one. There it is again. These are the same numbers, same thing we were doing just before, only they're different because the prices are jumping around a lot, which they have to do. That's the whole reason of why we're doing these things. This is the British pound. You can see the same thing in the British pound. The euro is the most pure because nobody can screw with the euro, not the Federal Reserve, not anybody. That's the world's currency. And, well, not the US dollar, but the dollar index made up of 54% of the euro itself. So that's why it's so very big. But you find those patterns, you'll do a good job. Here's the 5-minute patterns in the British pound. You can see all the ABCD patterns in the British pound. And then this is some of the others, but that's the main thing that I wanted you to see on this. Let me get this, I think I got to do it this way, don't I? Like there's where we go, get rid of that. And I think I just click this. I hope this is all I have to do. Did I get out? Okay, that's good. Now let's get up here. Here's where we are right now. Let's back to IBM. And let's see what we're doing here with some of these. Oh, we just had an ABCD here in the Nasdaq here, folks. This is just a 2-minute chart on Nasdaq. Let's just do this. Let's just do it quickly. We'll get a 3-minute chart, 4-minute chart up so we can see it easier. Okay, now this is the Nasdaq. Then this is one wild puppy. This is the pork bellies of the markets, folks. So let's take a look here. Here's where we are here this morning. All right, now we're just going to move it over like this. And what we're doing now is this is the high was made right here. Okay, then the market comes down. It has a rally right there. So that's your first ABCD pattern forming right here. There's your AB leg right here. Right there, you see that? There's your CD leg. And there it comes in. There's your low right there. Okay, now we just made another one on the upside right here. There's your low right here. There's your high. And misses it by, how much does it miss it by? About 40 points. So it doesn't quite fit, but there's nothing else you can do about that. That's one you can't take because it didn't fit exactly what you wanted it to do. Oh, maybe I did something wrong. Oh, no, I didn't. I know it's okay. Let me double check.
And Larry, do you always use the wicks versus the candle bodies?
I don't really. The only reason I do candles is people are used to it and I can count them easier. That's the only reason. I rather use a bar chart. I'm an old bar chart guy because candles don't show you. See, if you do a bar chart, this is my opinion. I do it for candles because people ask me to do it. But personally, when I do some of my charts, what I'll do is I'll go up to properties and I will change it from a candlestick to a bar chart. And then I'll be able to see the open, high, and close. You see, with this chart, you can see on the left-hand side is your open, And,
Okay.
and there's your close right there, so I can see where the high and lows of the day. So with the candles, it's not as easy.
Got it.
See, so that's the main thing of what you're watching. See, so there's one fitted on the downside. It didn't quite make it on the upside. But let me
Yep.
show you this one here today, folks. This is a really a big one today in the Russell. And the Russell has been really strong. It's still strong. But we like ABCD. Now here it is today. This is one that was very simple because all you had to do was get this out of the way. Now this I can draw it in just for you to show you. If you're home, you just draw your pencil like that, and there's your high right there, okay?
Mm-hmm.
Right, then you just take, well, you could take this one. Actually, this is the better because this is the opening price. Just take it like this, and then it should repeat. There's your AB leg right here, and there's your CD leg coming in there. There's your high right there. And in order to do that, there's a little tool that this one has. You'll see mark it like this. You can take either one of these, doesn't make any difference. It goes exactly to the same number. There's your sell point right there. And from there to there, that is, see, 70 points. That's $3,500 today. Just in that one right there. Okay.
Yep.
Now,
And that's on futures contracts that you're
that's a
trading.
futures contract for the Russell. Now you can do it. The best thing to do is if you're a stock trader and stuff, pick a stock, Marlo, and we'll look at it just for heck, and we'll something that's popular that's jumping around a lot. Just to pick one. I don't care what it is.
I've been trading XLV a lot, actually, healthcare. So we could
What is that? XL what?
XLV healthcare.
XLV. I'll put that in here. Hold just a second. I don't do any of that stuff, so I can put XLV. And it's a healthcare?
Yeah, healthcare.
XL.
It's a healthcare ETF.
Okay, well, there's more ETFs than there are stocks. I don't know if the people know that, but there are.
Yeah,
Here's
really.
XLV.
I actually didn't know
Okay,
that.
this should be just fine. Okay, here's XLV, and we'll get it up here like
Yeah, I'm
this.
actually right now looking for a daily reversal there. And so what I had done was I have two fibs, one from the low and then a second one from that second low. But you can see on the daily already an ABCD right there.
Oh yeah, there's a B, C, D right there. There it
Yep.
is. There it is. You can see it just as there's well, you get a little one too. Look, see, there's for guys that like to day trade. There's A, B, C, D here. What you can see the little ones. Let's just get this, move us over just a tiny bit right in here. I don't want to do all these because they'll be fluctuating. Here's a pretty good one though. You come up here to this one right here. That'll bring you to your top right there. Okay, and then you got the other one right here. Now this one, this is part that you learn as you learn to do this. When you have a market like this, okay. Now I want you to watch what's happening right there, folks, because there's the key to all the things that I do. Okay, you see that low right there? There's A, B, C. See that C leg right here?
Yep.
When you see this come out of here like this, it's no longer going to be AB equals CD. D is going to be 1.27 of the AB swing. So all I do is I have a function in here that I mark this off like this. And instead of being the CD leg being 1, it comes out to 1.27. You'll never find this in the Elliott Wave books because those boys missed it. And there is your high right there.
Wow, look at that. And that's because you gauge the momentum of that. You saw
yes,
how,
it's
how
point
strong
point
it came
C
out
is it's point C is where they lay the hammer down. Okay, now this also happens to be a great pattern because this is known as a 1-3-5 pattern. You see how you have higher bottoms? Remember we were looking at the euro looking for something that see have higher bottoms in here?
Yeah.
And if you measure just simple cycle stuff from low to low, you see from this low to this low like that.
Yeah.
Very simple. And you clone it and put it over there. There's your low coming in right about here.
Yeah.
So that's what it's real simple stuff. This isn't mathematics. This is just common sense, geometry and putting some numbers together. And that's pretty much what we like to do and get it done the right way.
Yeah, some of the best trades that I've had happen when I align my time cycles with the ABCD pattern, even particularly on like a weekly ABCD pattern or a daily.
Yeah,
you can get a really strong reversal out of that.
That's the problem that I had with astrology. Even when I wrote the book, and it was a very popular book, and I put the planets there, and I saw the relationships to them. But what happened to me, I was involved with a lot of astrologers that were professional astrologers, and they knew that I wasn't. And I'm pretty successful at this, but all I did was do ABCDs, and I looked at new moons and full moons and stuff like that. But then I would find stuff like the speed of Mercury stuff that
Mhm.
George Bear worked on. And when I saw combust and things like that, and when I saw the things that happened with her harmonic convergence, and then in 2008, I think I still got that. I keep that out there as I made a prediction on the bottom because on March the 5th of 2008, we had the same thing that happened, in another major bottom. And that was coming off the 82 bottom. And here we were in 2008, and it was setting exactly there. All the planets were lined up. The Bradley model, which you're familiar with, had turned down. Our Bradley model now is turning down, so the market has a negative bias to it. So those are the main things of what I'm watching as I look at these things here today. Let me see anything else that you wanted to talk about here that
No, this is great.
yeah,
How do you gauge so just using XLV here as an example,
sure.
how do you gauge when, or do you measure both? Whether you would measure off that second low there to look for a retracement, or whether you would measure off that lowest bottom there.
You mean
Um,
right here?
yeah, so whether you would measure off that one or whether
That
you
that
would,
would it wouldn't make any difference because they're so close. But
okay.
you
Oh,
should
well,
measure you
yeah,
should measure off of the bottom. Yes.
yeah,
Fact is, that's a good point. Let's just show you from the because mathematically it'll be correct. I can tell you that. Get this out of the way here. Put the little tool here. This is the bottom right here. Okay, there's your
mm-hmm,
bottom. Now
yep,
you have several ABCDs in here. There's this one right
yeah,
here.
yeah,
Okay, then you've got the other one that's right behind it. Okay, so now
yeah,
you've got another ABCD coming in here just a second. This is where people learn to do this stuff. You put the other one in, and there it is right
yeah.
here. Now here again, you see how it's
You
jumping
exceeded
real
it.
fast and it's got a
Yep,
gap in here. That's why you got to make this 1.27. So my program does this automatically for me because they know I make mistakes and they want to do it right for me. So I put in 127 manually, and it tells me that there was the exact high. Now look at I got this one here. What's that going to tell me? This is going to be a big one, isn't it?
yep,
All
yep,
right, because you got a big one. So all you have to do is you take the next one like this. There you go.
yep.
There you are. And look at that. You're missing again. Oh, this ABCD doesn't work, does it? Oh, yeah. Well, watch this. Come over, change that one to 127.
So each one can almost forecast the next one. If you see consecutive,
Amen, darling. You got
yep,
it. You're
yep,
absolutely
that they're
right. Yeah.
bypassing their target, then you know
Yeah.
that that's extra
Yeah.
bullish, basically, or
That's
bearish.
exactly right. That's
Yep.
exactly right. And the same thing on the downside is when it stops being bullish, it'll break those numbers to the downside, and that tells you that the trend is changing long before other people, start to see it. And that's the key to what we're looking at here as we're doing this thing.
Absolutely. Larry, thank you so much. This is so awesome. This is such a
Well,
I feel so fortunate to get to have you just share your knowledge with myself and
yeah,
my
the trouble is I can't get hooked onto the only thing I can work on the computer is I can buy socks and underwear from Amazon. Other than that, I'm lost. Like it took me 30 minutes to get this thing hooked up for Zoom, but I keep it as simple as possible. In fact, I have many programs that the people that built this Ensign many many years ago. They built these things for me. So when I want to see anything, I just hit that button and it'll do everything for me at
wow.
once.
Yeah,
Okay, it shows you.
what's the name of that program? Is it Ensign? Is that what I see up there?
Ensign software, yeah. It's
Yeah.
a charting package. It costs like I think it's $50 a month, and I pay for it. I don't even get it free, even though I helped them develop it. But you can see all these numbers. Look, 127, 618. I mean, they're all there. Look at you can just 618. They're every 50%. I mean, they're there everywhere.
Yep.
So
That's
that's what
that's
it's all
amazing.
about. But keep it simple. You do it yourself. I will tell you this: if you could just do it for a while and you can see that you can do it, you're in big trouble because you won't be able to put the computer away. I swear
That
to
is
God,
true.
you get the fear of God in you, and you say, "Oh my God, I'm going to be able to do this without any trouble at all." So, if you need to reach me, it's Larry at tradingtutor.com, and so I'll send you some information if you want. And I'll tell you what I'll do. Let's be really nice today. I wrote a book 30 years ago called "Trade What You See."
Hmm.
In other words, trade what you see, not what you think.
Yep.
Take thinking out of it. Just trade what you see. When they're telling you how much wonderful AI intelligence is, think the other way because someone is trying to feed you something. No matter whether it's that. No, let me show you my favorite. I love this one.
Yeah, your book, Trade What You See, I read that. That actually made a big difference in my trading because
Yeah, it's been
but
very
not only did I
popular.
pick up risk management from it, but I really feel like I digested the
Yeah.
Fibonacci sequences and the ABCD pattern as well.
Yeah.
Um, yeah,
Okay, I got something here for all you Generation Z guys. Okay, this is bed beyond meat. Okay,
fake meat,
now
right?
beyond meat. Okay, now look, folks, you got to believe this. Okay, this thing back here sold for 382. Okay, now you see the ABCD patterns here.
Yeah.
See how there's a three drive pattern. Here it is here at, well, I think it was three. What is it? What was the price? Excuse me, 240. It is now
Mm,
trading for, are you ready? 62 cents.
yeah. Wow.
Now, I know people, I know there has to be people that bought it there that still own it.
Yeah.
Now, somewhere in here, you got to say, wow, I got to get out of that. But don't fall for that stuff. The first time someone gave me a taste of that stuff, I don't care where the stock would have been, I would have been looking for a place to sell it because it was bad. And I know
Yeah.
they made improvements, but this company just didn't make it. They, it was something that just didn't, you know, just didn't do
It
it. So
didn't work.
be, think, trade what you see, not what you think.
Yeah.
And then,
Most
and when you think it's not what you think, it's how you think. In other words, think the way on the other side of the trade. Don't think about all the money that's being made. Think about the money that's being spent to make that money and
definitely.
what's going to be the difference. So think differently than people do, and you'll help you a little bit. Just, hey, look, you can throw all that out the window and just trade ABCD. That's what I do. I don't have to think very much at all. Because if I just because ABCD is the sum total of all the buyers and sellers. That's it. Doesn't
Absolutely.
make
And
any difference
well,
what
it makes
let's
it easy to make a decision too,
yeah.
right? If you
Yeah,
know, if
that's
you have
right.
an exact system that you know you're trading.
Yeah, that's correct. Let's get the 30-minute euro up because we were talking about that before. Okay, here's the 30-minute euro. Let me get this out of the way here. I got it one thing and I've got to take out of here that I don't need to put in here. Hold on a second to do that. And take this out. Okay, now here's that 30-minute euro that we were looking at before. Remember all the stuff that we talked about?
Mm-hmm.
It's here's that same thing we were looking at. All I'm going to do now is put that in there. Those are all those same ratios of all the swings. And if you go, you can really see all these are really,
Yep.
really close to the exact numbers. And I can adjust this to get some of this stuff out of it because you can't trade some of these small ones. But
Yeah.
the big ABCs are there and they're trading like today. There's not really much to do in it because the market just exploded when the news came out that there was no inflation. The consumer prices went down for the first time since 2000. Does anybody out there believe any of that? Don't they go to the market? I mean, give me, it's incredible. Anyway, that's pretty much it. Hey, thanks for having me on, and may God bless.
Yeah, thank you, Larry. And to
Yeah,
all the viewers, you can reach Larry at his email address, which will be in the video description below. You
yeah.
you can also reach me. You can connect with me through my Discord or through Patreon, and all those links will be in the video description below too. All right, everybody.
Okay.
Until next time.